The opinions expressed in this show are the views of the host and not necessarily that of WTRW, 94.3 The Talker, or the Bold Gold Media Group.
The following presentation is paid for by Century 21 Jack Ruddy Real Estate, who is solely responsible for its content. Portions transcribed.
All Century 21 real estate offices are independently owned and operated.
Hi, I'm Jackie Ruddy, broker of Century 21 Jack Ruddy Real Estate. Welcome to the Real Estate Roundtable on 94.3 FM The Talker. I'm here with my co-host, husband, fellow realtor, Pat Devaney.
Good morning, Jackie.
How are you?
No, I'm doing well. You beat me to it.
Yeah.
I'm doing well. How are you?
I'm doing well, thank you.
Good.
We have with us Cross Country Mortgage. We have Angelo Ambrosakia and Brooke Hines. Good morning.
Good morning.
Good morning, Jackie. How are you?
Thanks for being here with us. I'm well. How are you guys?
Very good.
Good.
All right. We're here every Saturday at 11 a.m., Sunday at 11:30 a.m., where we talk real estate. We have an exceptional real estate team, realtors who've been selling, listing, and appraising real estate for 50-plus years.
During the week, feel free to email us with any questions you have at questions@jruddy.com. That's questions@jruddy.com. Or you can give us a call at 570-344-6724. And when you go to jruddy.com, click on the webcam tab. We have a webcam on the building. It's pointing right at the corners so we can see who goes into the banks and all the traffic going by. So I got a call from my friend in Brooklyn one time. He goes, "What, are you coming back from Karamias?" I was like, "Yeah." He was watching me, yeah.
View our listings, search the MLS listings, and listen to archive radio shows by going to mobile-friendly jruddy.com. That's JRUDDY.com, where we also have all the popular podcast apps that we feature the radio show on. And don't forget about social media. We're just about everywhere. Okay, Angelo Ambrosakia and Brooke Hines, what's your team called at Cross Country Mortgage?
So we are the Angelo A team at Cross Country Mortgage. We're located right in Clark Summit, just right on Davis Street, 409 Davis Street. So anybody can come visit us at any time. We're always there, 8:30 to 5. So yeah, what would you like us to talk about?
I would like, Angelo, how long have you been doing mortgages?
A little bit over 20 years.
Right.
At this point.
And Brooke's been with you for quite some time.
3.5 years at this point, yeah.
All right. Well, you're a good team, and you've been around for a while. I want to talk about mortgages. Obviously, you're here. We had the folks from NeighborWorks here the last 2 weeks, so it's a good follow-up because you are the people that make it all happen. You have the money. And so where are mortgages in this? Well, I can't say post-COVID since we're still dealing with COVID, but, COVID blew everything up, right? And we saw a lot of changes happen in the mortgage industry. Is it coming back? Is it normalizing? What's happening out there?
I got a comment about the COVID thing. I see people driving down Blakely Street in the car by themselves with a mask on. What is that? What's going on with that? Are they afraid of contaminating themselves? So there's still a lot of people with the mindset that COVID is here.
True.
But it's gone.
Okay. All right. But the mortgages, they kind of blew everything up, I would say. And things got very abnormal, not just in mortgages, but everywhere. And like Pat just said, some people haven't returned. And I don't know if we're ever going to see that normal, like that pre-COVID atmosphere that we once enjoyed.
Right.
Yeah, I think we're definitely getting back to normal. At this point, when COVID hit, it was a huge blow to the industry. We, for a few months there, we were actually concerned about how we would move forward. Lending kind of shut down for a little while. But when it came back with a vengeance and super low rates. So we enjoyed a period there of where the rates were so low. Business was booming. We had a 2-year boom where people were getting those 3% interest rates for 30 years. So that all worked out great for us post-COVID. And then we had, the rates kind of jump up on us last year, which affected the market. It pushed some buyers out at that time. But a lot of those buyers now are getting back in. And I think we have more programs than ever at this point to help people get into a home.
Well, there's a lot of predictions out there, and we always see those predictions at this time of year. You know, the industry experts, whether they're experts in lending or real estate or what have you. So these are some of the headlines that have crossed my computer screen recently. Worcester Business Journal 2024 real estate forecast, housing to hit a rough patch. And then there's Yahoo Finance. America will become a renter nation. That's Grant Cardone warns the U.S. could see 100-year mortgages. I don't see that. Do you?
No.
Okay. No. Is commercial real estate in for a downturn or a crisis? Real estate investor warns U.S. is entering the greatest correction of its lifetime. New real estate forecast predicts a drop in home prices and mortgage rates in 2024. That's Yahoo again. And then there's one more. Real estate inventory remains steady. Prices fall slightly. Now, so everything that I read lately has been pointing towards a prediction that mortgage rates will drop in 2024.
Yeah.
So they more than doubled after we had the COVID crisis.
Almost tripled.
Almost tripled, yes. And then now they're starting to come back down.
Yeah, I mean, it's tough. Everyone wants to, predict where we're headed. It's tough to predict, but yeah, during COVID, those were when interest rates were 2 to 3. I got my house. I was 2.625. I was stoked. So I bought it at a good time. And now obviously we've seen them get a lot higher, and so we have seen a drop, but we just don't know where they're headed in 2024. It seems like most of the news is saying that it's coming back down. We hope that it's coming back down, and hopefully we'll have more buyers because of that, because we've definitely seen, as rates have obviously become a bit higher here, we've seen that it's where the payments used to be $500 less because the rate was so it's a drastic increase for some of these buyers, whereas before they were qualified at those lower interest rates, and now they come back and they're not qualified anymore. But
what the real big part of this is home prices have not come down. Mm-hmm. They stayed up, and usually when interest rates go up, see, we've had such a low inventory of homes for sale. The housing supply just isn't there. So the prices have remained high and strong for these sellers. Mm-hmm. But a seller who's in a rate such as yours or slightly higher, if they need to buy something else, they're not going to sell and then almost triple their rate, right?
Yeah, I feel like that's the common story of, everybody bought during COVID times and now they don't want to sell, which makes, a ton of sense. Like for me personally, I would rent mine out, keep that low interest rate and then, buy another home if I wanted to in the future. But that's the common story. So hopefully we'll see, as rates continue to roller coaster here, hopefully we'll see more inventory, and things will get a little bit better of a housing market.
Well, what I say to people who are contemplating selling or know that they're going to sell, do not, this time of year, they call me and they say, what should we do? I always tell people, list now. Do not wait until the spring. Don't put it off till April, May, and June. Because right now you have less competition. And that's when everybody wants to list their home, April, May, June. Mm-hmm. But if you list now and you don't have anything to compete with, you're going to get a premium price.
Yeah.
Yeah, and that's kind of what we've been talking to our buyers about also. We have this program now, and different lenders are doing this. We're buy now, refinance later. People that are getting loans with us now are getting a certificate where they could come back at any point over the next, say, 2 or 3 years, refinance, and we're going to waive our lender fees when they refinance.
Nice.
So a little bit more incentive to go do it now rather than try to predict or time when the rates might be coming back down. Because the other thing is, Jackie, with this, we've done comparisons for a lot of these people where everybody thinks a quarter point or a half a point is going to make such a big difference. And when we're doing quotes for people, the amount of the taxes for the property makes a huge difference, depending on how much money they're putting down, how much their PMI payment is. Is it in an HOA? So there's a lot of things affecting payments, not just rates. So to wait to find the right house but not buy it because you're going to wait for the rates to come down a half a point
Doesn't make any sense.
Isn't going to make sense. Buy the house. You could refinance when they come back down. If it's a company like us, your lender fees are going to get waived. And you can always refinance to lower your term. You could take it from a 30 to a 20 or a 30 to a 15. Lower your rate. You're going to have a lot of options, but don't lose the house. If it's the right house, don't lose it.
What's that saying? Date your rate, marry the
home.
Marry the home, date the rate.
Absolutely.
Okay, so, and that makes a lot of sense. So if it doesn't bust the budget, it's within, if you can make it happen and you're not foregoing dinner for 2 weeks of the month and you're not foregoing, simple pleasures in life and you are not foregoing your must-haves, do it.
Absolutely.
I don't know that the rates will ever see the rates under 3 again. I don't know. Who's to say? But getting back to where the rates are going in 2024, who knows? I mean, how many times have people said, oh, the Fed's going to do this, and they do the exact opposite? Nobody ever knows what the Fed is going to do.
Yeah.
Right?
And we get changes on a daily basis.
Oh, by the way, I should have started the conversation with, what's the rate?
I know the answer.
What's
Good,
the
'cause I
interest?
don't.
What's the interest rate?
I don't.
What do you mean you don't know? You're a lender. You should know.
I know. I'm
Isn't
raising
it
my hand over here.
Isn't
I know.
it just one number, guys?
No.
What's the rate?
It depends.
Teachers that.
I usually
Jumping
get
in.
someone screaming that across the produce section of
Really?
Price Chopper.
On
What's
Christmas
the rate?
Eve, what's the rate? Go jump in a lake. How about that? There's a rate for you.
How many things affect the rate? Let's talk about this.
Wow.
30 plus?
Yeah, how long do we have? Yeah, we do get this question a lot. And people need to understand if you're shopping for, number one, you should be getting a couple different quotes, I think, because different lenders have different products and programs. We have.
Let me stop you right there.
Yes.
So you're saying get different quotes. Many lenders say don't. Only deal with them because soft pull, hard pull, it's going to affect your credit. Your credit's going to tank. Your credit score is going to tank if you get more than one pull.
It's a great fear tactic. Yeah. So want to tell them how that works?
Yeah. So, it is a great fear tactic, to say that. But, it's important to get a couple quotes, to get what's going to be right for you. A lot of lenders have different programs. We have a lot of different programs that might work for a particular buyer that another lender doesn't have. We're an approved lender through PHFA. PHFA is an amazing program with amazing rates right now.
It's Pennsylvania Housing Finance.
Yes. Yeah. And that program, it's really that's like a typical conventional. It's the same kind of loans. Typical conventional, typical FHA loan. So either one, it could be either program.
Yeah, and that and PHFA right now, they adjust their rates. They tell all the lenders what their rate is. So you're not going to go to a different lender and get a different PHFA quote. They put their rates out, but their rates are generally 3/4 of a point or at least a half a point lower than wherever market rates are. So if you're dealing with a lender that doesn't deal with PHFA, let's say they're not on their approved list, there's grants you could be missing out on. That super low rate you could be missing out on. And that's one example that Brooke was mentioning. But besides PHFA, there are other unique products that we have that another lender might have, or possibly vice versa. So it is very important, I think, to talk to a couple different lenders. Go old school with it. If they're local, I mean, dealing with a local lender, I think, is always going to be your best bet.
Key. Very, very important.
This isn't somebody on the other side of the country you're talking to that really doesn't have that much skin in the game.
There is nothing better than being able to pick up the phone and call and talk to Angelo. I've had deals with people with Moonbeam Mortgage Company. I don't know who they were, but they were terrible. And then we sat down at the table and they changed the terms. There was nobody to call. There was no.
They don't answer the phone.
They don't answer the phone. It
You
was
can't get
terrible.
anybody. And
Being
they usually
local
have a time
is
difference.
key. I just can't stress that enough. Sorry,
Yeah.
I don't mean to interrupt your train of thought.
Yeah, and communication is key. Like for us in particular, the way our system works, whenever there's a milestone hit on a loan, say your loan is going into underwriting, it's been approved, your appraisal's been ordered, there are emails automatically generated to everybody telling them this. This is besides us sending out texts and calls and keeping everybody in the loop. So everybody always knows what's going on at any point in the process.
And that's one of the biggest complaints consumers, clients in real estate have, is a lack of communication, whether it be from the lender, the attorney, the inspector, the realtor. Lack of communication. A lot of people feel like they're in the dark, and that causes a ton of anxiety.
Yeah.
Well, especially up front, like when let's say we speak to somebody, because this does happen a lot, where somebody will get, an online pre-approval from ABC Mortgage or something, and the realtor will say, why don't you give Angelo a call and talk to him and, just kind of see what they say and what they could offer. And when we talk to the buyer, they have no idea what they were approved for, how much money they're going to need, what their estimated payment might be. I think they're just printing a letter and sending it to them and saying, go shop for a house, you're good.
And on the fine print below, it says pay off $10,000 of credit card debt, which they don't see because you need a magnifying glass. Mm-hmm. But that's conditional. And so that rate is tied to it. So is that loan. And so they're not seeing this until the 11th hour, and they're getting them in on whatever, like false information, really.
Mm-hmm.
Right. Or, a lot of times when we pre-approve somebody, not only do we give them the letter, but we also give them an estimate of how much money they're going to need to close, what their payment might be. A lot of lenders aren't sending that estimate out. So when we talk to somebody and they have $2,500 in their account and they need $8,000 to close, we're asking the question, well, where's it going to come from? You can't just say, I'll have it. You have to have a plan in place, because there's a lot of ways you could get the money that aren't allowed. You can't do a cash advance on your credit card. You can't go get an unsecured loan. You can't have your buddy at work lend you a few $1,000s. Like, you have to have a plan in place. And a lot of times when these letters are given to people, they're given out and the lender will know how much money they need, but the people really don't. So they go through the process of finding a house, and now they found one, they got an offer accepted, and it's scramble time. Where's the money going to come from? How am I going to do this? That's what you want to avoid when you're getting pre-approved.
And the seller accepted the offer because a pre-approval letter was submitted because they were pre-approved.
Mm-hmm.
Right. Mm-hmm. Right. And that buyer, we run into it all the time where they're just, I'll say, well, what kind of loan did they pre-approve you for? I don't know. Well, what was your percentage down? How much money are you going to need? Do you need a seller assist?
Right.
I don't know. What is that? Like, they're just not educated by these lenders. And that's what comes back to haunt them when you see deals falling apart. I didn't know that. Now they're telling me I need a cosigner. Maybe they're not reviewing pay stubs up front. They're not reviewing documents that need to be looked at. It's a process. And people, we've been doing this long enough now where a lot of the realtors in this area know we do our diligence up front, because we want that deal to close. We're not throwing a dart and hoping it hits the target and the deal closes. Like, if we give you a pre-approval letter, we're very confident that's going to close.
Well, aside from the fact that you're in Clark Summit on Davis Street, and I know that I can go there any day or night, right? Find you there pretty much. And there's this thing going on around social media, shop local, very big, support your local businesses and small businesses, gift shops, and so on and so forth. It makes sense to get your mortgage local as well, because not only are you dealing face to face with somebody that you can get in front of if you need some sort of extra explanation.
You can stop and actually talk to a real person.
Right. But you're also, when you close that loan, you're paying taxes locally. You're putting that money back into our communities through, generous service work that you guys do
Absolutely.
constantly.
We were one of the main sponsors at the local, at the Board of Realtors Christmas function. It happened not that long ago.
Right.
So we try to put the money back in and support local.
Right.
And I do think it really helps the entire process.
Yeah, when we refinanced our house, we went to one of the places across the street from us. And I was walking down the street. I was going to Caramia's for lunch. And I ran into the loan officer. He goes, "Oh, I got bad news." I was like, "Oh, geez." I goes, "What is it?" He goes, "The rates went down." I was like, "Oh, yeah." But I mean, that's a great thing to put a face on it and to be able to talk to the loan officer it's an amazing thing. It's if you've dealt with anybody on the internet, you know what I'm talking about.
That's a good segue a little bit too. Like when we originally started this conversation, you asked me what the rate was.
Right.
Right. Pat just mentioned something where he said the rates have come down. So in my mind, I'm thinking it's already locked. So, when we get a new loan in, we lock the rate. So if they go up, you're protected. If they go down, your rate is locked. That's kind of like the deal going in. But the amount of time the rate is locked is another thing that affects the interest rate. Is it locked for 30 days, 45, 60, 90? How long do you need to close? That's why I thought of that as a perfect segue, because that's something nobody would think about. A buyer isn't going in thinking about, whether it's a 30 or a 60-day lock. When that other lender quoted you a rate, did they quote it for a 30-day lock, but you need 60 to close? So the rate's going to be a little higher.
These are good questions that most, I'd have to say, buyers have no idea how to answer.
Mm-hmm.
They don't think about that. And just to touch briefly on that again with what affects the rate. There's a number of things. Your credit score is the most important. What type of loan you're getting, how much you're putting down, what kind of property it is, and what are you going to be using it for? There's so many things that affect that. You really have to tell your lender the entire picture and let them know exactly what's going on with all the details before they can give you an accurate quote. You can go onto a bank's 30 website and look at their 30-year rate, but that isn't going to mean really anything to you. You need to get a quote for your specific circumstances.
With us today is Angelo Ambrosacchia and Brooke Hines with Cross Country Mortgage. What is your contact information?
My cell phone number is 570-468-7995. You're going to get directly to me. You could text me or call me on that number. Our team email address, because nobody could spell my last name, Jackie. So we had to come up with something a little easier. So our team email address is angeloateam@ccm.com. Cross Country Mortgage, ccm.com.
What's
Easy
that
enough.
phone number one more time?
570-468-7995.
Our sponsor this week, we like to thank Century 21 Jack Ruddy Real Estate. Century 21 Jack Ruddy Real Estate is a quality service award-winning office consistently since 2011. Our remarkable realtors are masters of the market, containing the necessary knowledge and experience whether you're in the market to buy or sell a home. You'll be guided through every step of the selling process, from advising on how to prepare your home to sell to marketing to a wide range of potential buyers, while tirelessly working to secure the best deal. And when looking for a home to buy, Century 21 Jack Ruddy Real Estate will help you find a special place that caters to your individual taste and budget. Our agents take the time to understand your specific needs and preferences. You can't go wrong with Century 21 Jack Ruddy Real Estate by your side. Visit jruddy.com, that's JRUDDY.com, or call 570-344-6724. It's break time, so we'll be back shortly with more Real Estate Roundtable with Century 21 Jack Ruddy Real Estate and 94.3 The Talker. When considering to sell or buy a home, why choose Century 21 Jack Ruddy Real Estate? Let me tell you why. 70% of home buyers settle for the first agent they meet, and many regret it. 90% of home sellers hire an agent, but was it the right choice? Don't have agent remorse. I'm Jackie Ruddy, and I've been in and around the real estate business for most of my life. And at Century 21 Jack Ruddy Real Estate, we've been selling real estate for half a century. But we do not do it halfway. You deserve better than average. average doesn't help you. We know it's all about you and what you need. Century 21 is the #1 in brand awareness, is the most recognized name in real estate, and is the most respected in the industry. In this market, if you dream big, you need to move fast. So it makes perfect sense to contact Century 21 Jack Ruddy Real Estate, 570-344-6724, and visit jruddy.com. That's JRUDDY.com. Thanks for listening to the Real Estate Roundtable with Century 21 Jack Ruddy Real Estate on 94.3 FM The Talker. I'm Jackie Ruddy, broker, and with Pat Devaney, my husband, fellow realtor.
And we're back with a great discussion.
Cross Country Mortgage, Angelo Ambrosacchia and Brooke Hines, having a fabulous discussion. We can go for hours, right?
Absolutely.
So,
thanks for having us, Jackie.
Thank you for being here. So we established in the first part of the program that all lenders are not created equal. But there's so many people that think, just pick one, they're all the same. Right? How often do you hear that, right? So before the break, we talked about what affects the interest rate that someone gets. Well, let's talk about what affects the credit score.
Yeah, and there are a number of things that go into that. Number one, the reason you're getting your credit pulled, you could get a different score too if you're buying a car versus a home. There's different ways that they calculate the score based on how it's getting pulled. A lot of people will go on Credit Karma, something like that. They'll get one of the scores on there, and a lot of times we see it very different when we pull it. So
yours is a little lower usually?
It depends. Usually lower.
Usually lower.
Usually lower, yeah. But do you want to talk, Brooke, about like when we pull credit up front, how we pull it and
So we pull from 3 bureaus, Equifax, TransUnion, and Experian, and we take the middle score of the 3. So the highest and lowest get tossed out, and we go with the middle score. And we have the ability at our company to do a soft pull. So that's exciting. The people who say, I don't want to get my credit pulled by different mortgage companies and it affect my credit. And you are allowed a window to shop around. So they do allow you a window if you are getting your credit pulled by multiple mortgage companies in a certain time frame. But on our end, like I said, we have the ability to do a soft pull, so it won't affect the credit at all. And we can give a pre-approval and a quote just like normal. So that's exciting that we have that capability. And then, obviously when the loan goes under contract, when we actually get started, we will have to do a hard pull at that time. But anyways, kind of getting back to, what affects your credit. One big thing I wanted to mention, so many people will say like, I paid everything off, my credit's going to go up. That might not be the case because it's good to have a credit history. You actually sometimes, getting new loans, getting a diverse credit history can really improve your score. And keeping utilization low on your credit cards is also very, very important. You could have a really diverse credit history, pay all your bills on time, never miss a payment. But if the credit utilization, if all of your cards are maxed out, that your score is going to not be as great, So that's also very, very important. So having a diverse credit history and paying your bills on time and low utilization for your credit cards.
What is the magic credit score? What's the minimum?
So the minimum, it depends. It depends
on the program.
Yeah, it depends on the program,
like
and that's also a hard one to.
Conventional, it doesn't depend.
Right. Yes, so, you have to have
conventional mortgages. You need at least
like 620.
Okay,
620. Yeah. And then FHA, we could go lower than 620. We can go really low, but we hate saying that because the lower your credit score, the more you may have to have more money down. You have to have a really good file for it to work with a really low credit score. So, it's possible we could go down to even, if you have a 560 score, it's even possible to get that, but you have to have a ton of money down. You're going to have a lot of other compensating factors to make something like that work.
Brooke Hines and Angelo Ambrosacchio, we're out of time. Cross Country Mortgage, how does someone get in touch with you, please?
So our website is angeloateam.com. All of our contact information is there. You can also put in a pre-approval there too if you want to get started with the process, but angeloateam.com is our website.
Come back next week.
Absolutely.
Sounds good. Thank you so much.
Join us next Saturday at 11 a.m. and Sunday at 11:30 a.m. to listen to more of the Real Estate Roundtable with Century 21 Jack Ruddy Real Estate on 94.3 The Talker.